Hey there, welcome to another interview with a local specialist. And this one's really exciting. I am here today with Joe Jackson of Republic Bank, who is a lender who's been doing this for 28 years. He went to Ocean City High School. He's hyper familiar with the area and he can get deals done. And best of all, and I think the thing you probably care most about is he has excellent rates. But today, we are going to be focused primarily on what the rates are going to be doing coming up, specifically for second home loans. So with that out of the way, welcome, Joe. I appreciate you taking some time to hang out today.
Yeah, no, thank you. Thanks for having me.
Absolutely. So I used to do rapid fire questions to break the ice a little bit, but we're good. I don't think we need to do that one here. I put you on the spot. So let's first talk about upcoming rate changes in general. And then I want to hit specifically on G fees, which are going to be hitting, as we talked about off camera beforehand, the second home mortgages. So in terms of rate changes, right, everybody sees the news, everybody's fearful of what might be coming. I believe the Fed's meeting today. I could be wrong on that. What do you expect over the coming weeks, and what do you know definitively will be changing on your side?
Anytime there's threat of inflation or we see inflation, rates are going to go higher. So we do expect the Fed to raise short-term rates a quarter. It's probably already baked into our rates already, knowing that that's what's going to happen. So the Fed has implemented some changes on second home rates coming up April 1st. They're going to increase. It's almost, we're looking at it almost like a luxury tax that the Federal Housing Finance Agency has put this fee in, and it will increase the second home rates. How much? It does depend on down payment and credit score. And there's a lot going into it.
Awesome. So you that was a great transition, taking us from point A to point B. So there have been some rumblings about that. I know I think I saw them as early as January, but I don't think it really was fleshed out until somewhat recently. And obviously, again, you and I spoke about this, the actual impacts it's going to have. Is this going to result in a higher loan rate? Is it going to result in higher upfront fees or closing costs, or a bit of both?
It's going to be a little bit of both. They have some numbers. It does depend on the down payment. The larger the down payment, the lower the fee. It's a fee that can work just as someone pays points. I can pay down points to buy down my interest rate. We could go backwards and we could say, let's take this fee and add it into the interest rate. So say an interest rate, say someone was putting down 35%, and borrowing, on a sale price of 500,000, borrowing 325. If the primary rate was say 4%, then this rate on a second home would be more like 4.375. So we just rolled that fee into the loan and just raised the interest rate. Otherwise, that same client would need to pay about $2,000 in a fee to get the rate back down to, say, where a primary rate would be.
Gotcha. Okay. So it's kind of an either or pick your poison. And obviously, it's going to depend on the person's financial situation, cash on hand, all of that to see which one makes more sense for them. Does that sound right?
Yes, exactly.
Okay.
Now, if you put down less money, then of course this fee goes higher. And then at some point, it might be a spot where you can only pay so much in fees when you get a loan anyway. So, that it will force the rate to go higher, if that makes sense.
Okay. So in terms of, let's say, worst case scenario, right? We know that, some people absolute minimum would be 10% down here for a second home. So if somebody's doing that, how substantial is that impact going to be for them?
It could be as much as 3 points for the loan. So it is a sizable amount in fees. In that particular case, with normal fees and then 3 points, it could price them out of doing we call a QM loan. So it would just price you out of that, and you'd have to take a higher rate because the fees would be too much to qualify.
Okay. So what I want people to take away from this is that come April 1st, getting a second home loan, a conforming conventional second home loan, we're going to touch on this in a minute, will become a lot more expensive. So is there a way, does this affect jumbo loans? Are there other types that will avoid this, or is it just the conventional mortgages?
So at Republic Bank, the jumbo loan, so the jumbo loan limit starts at 647, $201. So any loan amount above that doesn't get this price hit because it's not being sold to Fannie Mae or Freddie Mac. So with that, it all depends on the lender, what their rates are. So we have a real good aggressive jumbo rate right now. We're at 2.875. 30-year fix, 0 points. So it's, that's a great option when you're out there looking at the housing market. Because now, maybe you look at something that the same payment on the jumbo rate might be, better than a slightly lower loan amount on the conforming
Yeah. So
rate.
the way that I see this going specifically, especially once we hit April, and this is my encouragement to everybody who's watching this right now, make sure, especially if you don't have a lender who can speak to this the way that Joe is clearly knowledgeable about this. Number one, give Joe a call. But if you don't have one, definitely reach out to him as well. His contact information, I should say, is down in the description, because you're going to be relying on your lender to provide you proper guidance, to really get to know your situation, to provide a path of which loan is going to be the best for you. And this is not going to be as straightforward as it once was. So make sure you have a good partner on your side. Now, outside of the jumbo loan potential, I'll call it a loophole. It's not really a loophole, but a way to avoid these fees. Is there any other type of product out there that might make sense that you guys are thinking about? Because I'm sure that you've been planning for this and have some idea, right, of how to help people
Yeah.
to continue to get second homes.
If you were not selling the loan to Fannie or Freddie, what we're trying to do is create another product, and it's in our product committee, almost ready to wrap up, hopefully. So we're looking at doing, say, a 7-1 arm. So instead of, selling this to Fannie and Freddie, we will take these loans, second homes, and we'll move them into a 7-1 arm. So we'll come up with a rate. So say someone's putting down 20% and this rate ends up being more like a conforming loan is 4.75, and we could do a 7-1 arm, maybe like 3.25. Then it just allows us to see what's best for the consumer and what meets their needs. But if you could save that much on a sizable loan, it could be a great product for someone. So we're just totally looking outside the box, try to come up with something, a workaround. We are hopeful that maybe they will roll this extra fee back in the future, and then we'll go back to normal rates again.
Now that's good to hear. And I know, when people hear that, they're going to get optimistic, but at the same time, we have to deal in facts, guys. And this is coming. This is very real. So if you're making a decision, you really have about 2 weeks to truly avoid it and live in the world that we all know and are comfortable with pre this increase. But outside of that, again, you're going to need to leverage your loan partner to help you make the right decision to get you into the home that you want here at the Jersey Shore. Now, with that said, again, there's going to be a lot of fear out there. Make sure that you stay tuned, right? Keep in touch with your lender, whether it's Joe or somebody else, as these changes are happening over the next few weeks, because that is going to be incredibly important to make sure that you're making the best decision possible. Anything else on your mind, Joe, that you think people should know, whether it's about these, lending as a whole?
I just think what Nick was saying is important to align yourself with a lender, whether it's me or someone else, someone local that knows the market, knows what programs are out there, or even what's coming down the pike. It's always good to talk to a lender. Make sure you're getting good advice and being qualified for the right house that you want to purchase.
Perfect. Well, Joe, again, I appreciate you spending a few minutes with me here today. And I hope your phone will be ringing soon with some of these people looking to bounce these hypotheticals off of you. I know you've taken great care of the clients that we have working together currently on a few deals. So again, thanks for your time. And I will definitely be talking to you soon.
Awesome. Thanks for having me. See you.
You got it. See ya.